Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Today we're going to be doing a deep dive into another uranium company, and this time around, it's Baselode Energy. Before we get started, standard disclaimer, none of this is investing advice. Do your own due diligence, and as of the time of this recording, I do not own any shares in Baselode Energy. Baselode is a uranium exploration company located in Canada's prolific Athabasca Basin. It has a market cap of approximately $58 million, trades on the TSX Venture Exchange in Canada and the OTC markets in America. And unless otherwise noted, all figures in this video will be in Canadian dollars. I like to start with an economic assessment when I evaluate a company. In this case, there is none, as of course, it's an exploration company. But what I do want to highlight is the recent assay results coming out of their Akio deposit, because they do look quite promising. The grades of U3O8 discovered at Akio are not anything to write home about when it comes to the basin itself. They range from 0.11% to 0.9%. Now, this is great when we look at the world average of around 0.2%, but of course, we're in the basin, where average grades are approximately 2%. So it's a little low for that, but as we'll see, a lot of this mineralization is quite near surface, meaning it is more easily mineable than a lot of these other deposits in the basin. In fact, the uranium discovered here is between 25 to 325 meters below surface, with an average lower depth of 155 meters. So when it comes to putting in an open pit mine, a simple open pit mine operation, a lot of this does look promising. Now, we do have to keep in mind, of course, we don't have any sort of PEA or anything that lets us know the economics behind it. So this is very early stages, and we need to consider it as such. So as I mentioned, this mineralization starts at shallow depth. Now, the advantage there is there's overburden, which is a glacial sediment on the top of the deposit. This is easily removable without explosives, which is great because a lot of open pit mining requires explosives. Obviously, this causes potentially much more environmental damage, costs more money, and takes more time. So that's good news. And from there, the pit can start being excavated from basement rock, and the mineralization starts pretty much right away after that, at least according to CEO James Sykes. And so the extraction would likely be simple and also very economic. Now, the drill program that they undertook to find this mineralization was extensive. In fact, it was 22,500 meters of diamond drilling that was completed here in 2022. So this is new, this is fresh, and this is exciting, and I think it's going to be a catalyst for the company price moving forward. Another great thing about this deposit is it's located near a lot of infrastructure, and the most important and key piece of infrastructure here is the Key Lake Mill, which belongs to Cameco and Orano. It's located approximately 70 kilometers southwest from Akio, meaning that, hey, it's taken care of. This is a huge advantage, especially economically, as building a mill can be extraordinarily expensive. It seems like the only infrastructure that will need to be built to allow this to happen is a single 30-kilometer road, which obviously that's not nothing, but when we compare that to some of the deposits, let's look at NextGen, let's look at Fission, where an entire network of infrastructure needs to be built, they're ahead of the game here at Baselode. Now, if we're really looking ahead and we want to see the timeline to production, it's going to be 6 to 12 years at least. And obviously that's a concern because we have to ask ourselves, what will the uranium price be in 6 to 12 years? I mean, it's impossible to know. It might follow the coming bull cycle. We might end up in a bear market at that time. So that's definitely something to keep in mind if you're looking to buy into this company and hold on for the entire way until production. Although at this stage of the game, I don't think that's what most investors are planning on doing. An N143101 mineral resource calculation is planned for Q4 of 2023. Now, this is important to differentiate from an economic assessment like a PEA, because this sort of report generally only speaks to the quantity and quality of the resources in the ground and is not an economic assessment. So that's going to be happening planned for Q4 2023, and then I'm guessing the next step after that's going to be a PEA. It should also be noted that they intersected visible nickel-copper sulfides near surface while undertaking this drill program, which they are currently waiting for assays on. We're interested in the uranium, but hey, that's a bonus that could turn into something profitable in the future as well. So that's the Akio deposit. This is near surface, high grade when compared to the world average, and should be mineable using a simple open pit methodology, which means that it will be economically viable, and especially a lot more economically viable than many of the deposits in the Athabasca Basin. So all of this looks very promising to me from an initial standpoint. Of course, we always have to keep in mind this is very early stages. In fact, this is the first exploration company that I've evaluated. So I do want to keep stressing that. Nothing here is set in stone. We do not yet have an NI 43101. We do not yet have even a basic PEA. So those are the things to look forward to get a little bit more certainty as to the overall picture of Akio and how economically viable and profitable it can be. Now, Baselode, of course, does have other properties. We have the Catharsis project, and this has numerous high-grade uranium surface showings discovered in the 1970s, including as much as 7.65% U3O8. Drilling is currently scheduled for Q1 2023, so that's another property to keep an eye on and take a look at those results to see what they discover. The Shadow project is quite a ways away from anything substantial happening. It looks like there's no drilling currently planned, but an airborne gravity survey is scheduled for Q4 2022, but that is a really early stage sort of survey, and it's really drilling that is going to bring out the true value in that deposit. So we're going to have to wait for that as well, Q4 2022. Baselode Energy is debt-free. You guys know I love that. In fact, it hasn't had debt for 5 years, so that's awesome. They've got about $11.5 million of cash in the treasury, and we've been talking about insider ownership. Baselode has approximately 16% insider ownership, which is excellent. We love to see management with skin in the game, so that's a huge plus. The CEO, James Sykes, also has 15 years of experience in the industry and was involved in the discovery of over 550 million pounds of U3O8 in the Athabasca Basin, including NextGen's Arrow deposit. He was involved in that, so that is a great sign. When we take a look at management, I've said before that I don't pay a huge amount of attention to management simply because as a small retail investor, I don't have the ability to form relationships with them, really pick their brain and see where they're coming from. But we love to see this sort of experience and this sort of past success. Let's take a look at some of the bearish factors, and really I can't find a lot of them. Aside from the fact that this is a very speculative play in my mind, I don't personally invest in explorers without a discovery. This one has a discovery that's looking promising, but I need to see a PEA before I would really feel comfortable taking a bite here. However, of course, things that are typical of the Athabasca Basin. Agreements will need to be made with indigenous stakeholders. I've mentioned this before. This is not a bad thing. Like, I don't want people coming at me and thinking that I would rather they not do that. It's just something that takes time, something that takes additional capital. There's an expense to it, and there's an investment to it. So that's always something that you have to be watching for. It's just something that exists in the basin that doesn't exist in some other jurisdictions. There's no economic assessment, as I've already mentioned several times. For me, that's a bit of a con, but if you're investing in an exploration company, that's going to be the norm anyways, so maybe that doesn't bother you. And while nowhere as exorbitant as some of the other companies we've looked at, I'm thinking NextGen here, I'm thinking UEC here, James Sykes' total compensation is a little high for my liking for such a small market cap, at approximately $747,000 Canadian, according to Simply Wall Street. So that's a little much, but it's nothing crazy or over the top. All right, guys, that's it for Baselode. I know it was a little bit of a short one today. That's because there's simply just not enough data for me to make a really deep assessment as I have with some other companies, because there's no real economic assessment and it's very early days. So that's just one thing to keep in mind when investing in a company like this. When I invest in any commodity, I like to hold anchor positions. In uranium, it's the ETF, whether that be URNM in the States or Hura in Canada. And after that, I go to developers and I don't really mess with exploration. So when you are investing in a company like this, you have to realize there are so many unknowns. I mean, even a PEA, a PFS, and an FS, there's still so many unknowns when you have a company with with all of that. And here we don't have anything like that. So I think it's a decent company to perhaps have a small percentage of your portfolio allocated to. But again, not giving advice here. That's just my view. As for myself, I will be patiently waiting for a PEA. Now, some people will say, well, if you wait that long, the company could go up quite a bit before the PEA comes out. I don't care about that. Somebody else can have that money. I'm more interested in certainty. And I know there's a lot of hype around uranium in general on Twitter and online, and people are talking about when it's going to moon and all of these sorts of things. I'm not in uranium to have my stocks moon and get super rich and make a ton of cash. I'm here to make modest returns. If I get more than that, I'm going to be very happy. And so I'm sitting on the sidelines patiently for now, waiting for a preliminary economic assessment. Lastly, I do want to once again mention the great YouTube channel Resource Talks. They did an interview with James Sykes. I think it's a 30-minute interview where a lot of specific questions are asked about the Accio deposit. And I think it's very enlightening. I think Antonio, the host, did a great job there. And I think James Sykes did a great job answering the questions as well. So I would send you guys over there after you watch this, and I think it can provide some insight. All right, please do let me know in the comments if I missed anything bullish or bearish. It would help me and everybody else out a lot. And if you appreciate and enjoy this content and find it useful, consider subscribing, comment, leave a like. All these things help the channel to grow. I'll see you guys next time. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.